Stock investors have had little interest in banks over the past year. Well, except for Warren Buffett. In that regard, Berkshire Hathaway has been building its position in banks over the past year. Berkshire is now among the five biggest shareholders in Bank of America, JPMorgan Chase, Wells Fargo, Goldman Sachs, U.S. Bancorp, and Bank of New York, and with big stakes in other banks. As a disclosure, I have a position in Berkshire Hathaway B Shares. Typically, bank stocks have generally done better when the economy is growing strongly, when companies and individuals are taking out more loans, and when interest rates are higher. But right now, investors are thinking the exact opposite. As a result, bank stocks have fallen. The KBW Bank Index, which is made up of 24 of the leading national and regional banks, is down about 17% over the past 12 months. Banks have been treated as the toxic, levered housing plays they were back in 2007. As a contrarian, those are the kind of conditions, and this is the kind of thinking I look for. So today, we're going to take a quick look at banking and the charts of WFC, BAC, and LKZ. Wait a minute. WFC is Wells Fargo and BAC is Bank of America. So what is LKZ? Well, LKZ is one of this channel's subscribers who seems to get it. LKZ has been tracking some of the stock picks and has noticed they're doing well. So I have dedicated this video to LKZ. Okay, let's take a look at the banks. All we've heard about lately is the inverted yield curve and the possibility of a recession. If a recession happens, shares of banks, along with most stocks, won't find too many buyers. But what if the fears of a recession in the United States are overblown? What if the economy keeps growing? Well, bank stocks may look a bit better. Consider that the financial sector's price to earnings ratio is near the lows of the past 5 years and easily the lowest of any of the S&P 500's 11 sectors. Consider that banks are much healthier than they were during the financial crisis. Today, bank capital, the main financial defense against losses, is high, and profit growth continues. In the second quarter, bank profits grew 9% among the strongest performance of the industry groups in the S&P 500. Then consider that banks have been giving back more money to shareholders. For the 12 months that ended on June 30th, JPMorgan Chase, Wells Fargo, Bank of America, Goldman Sachs, Morgan Stanley, and Citigroup handed back about $135 billion to shareholders through dividends and stock repurchases. As this chart shows, the financial sector's total yield, which includes both dividends and buybacks, was over 7% at the end of the first quarter, the highest of any other sector in the S&P 500. Bank stocks have been cheap for a while, so maybe it's time to consider investing. So now, let's go take a quick look at Wells Fargo and Bank of America. I've chosen Wells Fargo and Bank of America because they each have different patterns, but both stocks look good. So let's first take a look here at Wells Fargo. The symbol is WFC, and this is the 20-year monthly chart. And the close was 48.65 on Thursday. Now, looking at this chart here, we have a general bottom in this level here. Not perfect, but it's close enough. But moving on down here to the MAC, you can see that the first bottom was here, but the second bottom is down here at -2. To me, that's a favorable divergence. Going back down here into the MAC, it also looks like we're starting to see a basing bottoming pattern in this area here. That is also favorable. That's also shown by the histogram as well. Basing bottoming here at the slightly higher level than it was back here in 2016. Going here into the price rate of change, also a bottoming pattern similar to what it did back in 2016. Now, you see there, and it looks like the fast line wants to move up. We're below zero, but it looks like it wants to improve and head on up. You can see that improvement here in the RSI. It's at a relatively weak 46.72, yet you can still see the bottoming and basing pattern, and it wants to move on up. Looking here at the stochastics, same thing. Fast line has pierced through the slow line, and it looks like it wants to bottom here, just as it did back in 2016. Into the volume, volume looks fine, and then into Williams. Williams looks very similar to the other patterns, such as the basing bottoming pattern here, and it wants to move on up. Back up to the price chart, you can see again, one more time here, that this level here is somewhat consistent, but if you go back to 2009, we still have a pretty decent uptrend. Now, Wells Fargo has had its share of problems, but a lot of that is in the past, and that has punished the price. So perhaps it's time to take advantage of that opportunity. Let's go now take a look at Bank of America. Now, we did take a look at Bank of America not long ago, but we'll go through here quickly. Bank of America, the symbol is BAC, and the close on Thursday was 29.67. Now, what's interesting with Bank of America is the large cup and handle. You can see that here all the way down through the cup and then up, and then here we have the handle. Very nice. Looking here at the MAC, the way this shows that this is the handle here, and the fast line is moving on down. It's still below the slow line. Both are above the zero line, but it looks like it's had several opportunities or attempts, let's say, for the fast line to move through the slow line. It looks to me like it's gathering another effort to do the same thing. But we can see here in the histogram that I think this time it's going to be successful. We're getting close to that zero line. Moving down here into the price rate of change, same thing. The fast line has already popped through the slow line and has gone just positive recently. Bottoming process there, not unlike here. Moving down into the relative strength index, we're at a relatively moderate 53.58, and yet the maximum negativity recently was at that point there, and it does look at least somewhat of a bottoming basing pattern there. Doesn't look all that similar to back here in 2016. This actually looks better. Moving on down in here to stochastics, this looks good as well. It's already moved off of that 50 or midline heading on up. And then the volume looks fine. And then the Williams also looks good here with the bottom, say in late 2018 at that point, and heading on up into that overbought territory, which I think it'll head up there and can do some sawtoothing up here for some time, as it did in these previous periods when it got into that upper area. Back up to the price chart. I really like that cup and handle. It looks to me that there's just a slight sell-off of shares over the past, say, year and a half. So pretty soon, all of the sellers are going to be done, and then the buyers move in. So it looks good to me. Again, this is somewhat of a divergence, kind of like what we saw with Wells Fargo, meaning that the MAC has a decline both in the fast and the slow line, and it's coming down to the zero line to reset. Yet the price has gone kind of sideways in that general channel here, and going sideways while this resets. That's a favorable characteristic. So once that MAC gets down, resets, when the fast line goes through the slow line, look for Bank of America to pop. And once it pops above this level here, then the traditional technicians will want to take over and buy into that. So consider Bank of America also as an investment, but both for Wells Fargo and Bank of America, conduct your fundamental analysis. And for today, that's ChewDog Charts. Thank you.